Let's stick with that tech trade. Despite these recent declines, our next guest says that Nvidia, Tesla, and Palantir have showed the most net buying of active stocks on his platform. He favors some low volatility, high dividend names here. Steve Sosnick's with us, Interactive Brokers chief strategist, joins us here at Post 9. It's a good day to have you.
Good to see you.
Thanks for coming in. Talk about why those names in particular are moving.
You know, we're still having this little battle between, what I'm going to call FOMO, MOMO, and NOMO. Basically, there's still this fear of missing out. We see here just the SPUs have bounced like 40 points since I've just been walked from there to here. And so people really don't want to miss what they see as a buying opportunity because for the better part of the last few years, every dip has been a buying opportunity. This one, not so much. And I think a lot of what we see are active traders sort of wedded to that strategy, hoping this will pan out. And, and those moments where it does pan out, we see, people jumping right back in.
Right. So this notion of a retail buyer strike combined with a hedge fund momentum unwind, is that a fair framing at the moment?
To some extent, I would say our customers really range the gamut from small investors to large investors, and very heavily, the numbers I'm seeing are very heavily weighted toward active traders, because if I'm looking at activity numbers, it's going to be the most active customers. Those, one of my friends at the SIBO calls it pro-tail, because they're sort of retail, but a bit more.
So what are they doing with tech, the heavily owned Mag 7 stocks?
As of the last time I checked the numbers this morning, they were still buying. Nvidia remains the most actively traded and the most actively bought stock on our platform, Tesla being number 2. These stocks brought them to the dance, and they're not abandoning them.
Was Friday a good example of that, too? What do you think happened there Friday? Or was it about month end, something else?
I think Friday was month end. I think that close was for lack of a better word, phony as can be. But it shows you how the market, as soon as there's a buyable dip with any little bit of momentum, people jump on it. And it's probably no coincidence that it was month end, certainly the month end bargain hunting, but also no coincidence that it was a Friday where you had weekly option expiration and, of course, the daily option.
What about the day part? First 2 hours of trading versus last 2 hours. Are we seeing evolution in that kind of behavior?
I don't have clarity into what our customers are doing in that, but what I see in terms of the market behavior, yes. I mean, I think this was the rare morning where we didn't wake up and see futures just grinding higher. Wake up and see them up 5 points and then see them up like 20 or 25 points by the time we get in, or sort of the market opens. And so there's been this grind higher because people are used to it. We didn't see that today because the news was overwhelming. We also sort of see the grind into the close, and that more or less depends on the character of the move. But we do still, even yesterday we saw a big bounce, relatively large bounce into the close because it was the first of the month, and so presumably money flowed in.
I know you've got some thoughts on the VIX, which just hit 25.
Okay.
And whether or not that is a fair measure of fear at the moment or not.
My comment about that is VIX is not a fear gauge, but it plays one on TV. It's not specifically constructed to reflect fear, but of course it does reflect people's perceptions of volatility over the coming 30 days. That's what it's constructed to provide. And so, yes, when things are moving around a lot, people then project that they will continue. So, but here when we see VIX around 25, roughly speaking, that's about a 1.5% daily volatility for the coming 30 days. And when we think about the movements we've seen over the past couple of days, when we think about the potential for a government shutdown, frankly, in less than a week and a half, is it wrong to think that we could get 1.5% daily moves on SPX? No. So I think it is reflecting more caution, not reflecting outright fear.
What about cash levels?
I don't have a ton of clarity into what our customer cash levels are, Sarah. I wish I could tell you.
But so then how do you describe sentiment overall? I know you talked about buying the dip. So is it overall optimistic?
It still remains. Again, when I checked sort of our top 25 list today, it was not just the names that I mentioned. People were buying triple Qs. People were buying SOX L, the triple SOX. There's still this love of leverage, and I think until you see that shaken out, where people are maximizing risk, at least active customers, active traders are maximizing risk, you're going to get this kind of grind back and forth. You haven't seen the full shakeout yet.
Right. Kind of like the leveraged home builder, the nail, right? That's been a tough lesson. Steve, thanks. Good to see you.
Thank you,
Appreciate
Carl.
it very much.